Very, very warm greetings to you as you join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluko. Welcome to the month of August. We thank God Almighty for seeing us this far, and we pray that the remainder of the year will meet us in happiness and in joy, and that our businesses will flourish. We also say Baraka de Salah to our Muslim compatriots. We pray to Allah that He grants you recompense for the sacrifice that you made during the month of Ramadan. Last episode on Tax Matters will deal exclusively with transfer pricing, and in doing so, we share with you two well-researched papers. We do recall that we did promise that on today's episode, which is a follow-up episode, we'll be sharing with you the interactive session that followed the paper presentations, and that if time permits, we'll also bring you the studio interview that we had with Mr. Bamidele and Mr. Gbonjubola, both FRS point men on transfer pricing. That promise we intend to keep today. But before we go on, let's refresh your memory on transfer pricing. Let's listen to Mr. Gbonjubola, who gave a very beautiful and concise summary of the contents of the two papers at the workshop.
I will just take 5 minutes to summarize what I had from the two speakers. One question that Mr. Oyedele asked is, why TP? Why now? Many of us will know Sabmiller. Sabmiller is one of the largest breweries in the world. And in Africa, the main base is South Africa. But in all the subsidiaries in Sabmiller, the Ghanaian breweries is the most profitable in the Sabmiller group. And yet, that is where the least tax is paid by the group. And the question you want to ask yourself is, then where does the money go? Maybe another example I want to give, I think, which is very close to what Mr. Oyedele gave, is about Kenya. The very first successful TP audit they conducted, they made 1% of the GDP from one case. We have seen the example of GSK. I mean, imagine in just one tax audit, over $3 billion US, not 3 billion naira, being made. So that tells you the importance of what we are talking about. And now you can say, oh, for government, that's not a problem. After all, more money is coming into government. But assume that it's your company having to cough out $1 billion US. Can your company survive? I'm talking in Nigeria now. Assuming tomorrow you get an additional, undisputable, unquestionable additional assessment, $1 billion US. How many companies in Nigeria will be able to survive it? And I think this underscores the importance of TP to both the taxpayer and the tax authority. Now, Mr. Bamidele, in his presentation, talked about mutualism. Mutualism is talking about all of us coming together to work at this issue. And that speaks to 3 major factors. One is transparency. Transparency on the part of the tax authority to say, look, these are the rules. These are the way we are going to do it. Transparency on the side of the taxpayer to say, look, I am not hiding anything under the table. Yes, I have agreed with my principal, my subsidiary, or with my holding company to transfer this product at 1 naira. But because I know it is not arm's length, I will record it at 2 naira because 2 naira is the arm's length price. Transparency on both sides. Good faith is very key as part of the mutualism. That is, both the tax authority and the taxpayers are acting in good faith, both in our documentations, both in our inquiries and examination. Reciprocity is the third element in mutualism. After all, in Africa we say respect begets respect. If the taxpayer is open, why would the tax authority not be open? And vice versa. Another thing I got from Mr. Bamidele's presentation is that there is obligation. There are obligations expected both from the taxpayer and the tax authority. When I use the word taxpayer now, I'm believing that the consultants, the advisors, they are part of it. And for FRS, what are the obligations that we can get from what has been presented? One is to provide simplified, understandable, clear guidance. We have been told about various forms, declaration form, disclosure forms. We are having our taxpayer services already been empowered to deal with inquiries. Simplified documentation process. That is, I know if you look at the declaration form that is appended to the TP rule, they appear very, 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 very complex. But indeed, when you look at each segment, they are actually very simple things they are asking us. And I can assure you the TP disclosure forms are going to be much, much simpler. But again, this is a challenge for us as FRS to do as an obligation. And also is that we must minimize the cost of compliance. When the CDA was talking, he said we shouldn't act such that we will compound your business woes for you. We should actually make it lighter. And I think this is a principal thing for us to watch out for in FRS in implementing the TP. And very importantly, we must have a platform for dispute resolution. On the part of the taxpayer, what are the obligations imposed? Voluntary compliance. Where we have full voluntary compliance, over time it's going to eliminate suspicion. We begin to take each other for the face value. But where we have to be coerced before we comply, then even when we come forth, we still begin to doubt whatever we have presented. And this one is very key for us as business operators. From Mr. Oyedele, some of the salient things he has said to us is that TP is not new, and I agree with him. It's not a new type of tax. There's no tax called transfer pricing tax. There's nothing like that. It's just a method of examination of transactions. And what is key here is to ensure that there are no mispricing. You can't forbid a son from buying from the father or from a daughter from selling to the mother. You cannot legislate that. But what is key here is that when you are doing that, ensure that you use the open market price.
Immediately after Mr. Gbojubola's summary, contributions flowed in from the floor.
I have a friend who has a company and he wants to transfer an asset from his company to his son's company. He has done a deed of gift. So a deed of gift. What impact would that one have on this pricing tax?
There's a discrepancy between, the safe harbor. Like one is you're giving safe harbor on one hand and then taking on the other hand, since it still needs to comply, satisfy arm's length rule in the first place. The second question is on documentation, and it's directed to both presenters. But we've been talking about documentation. I just like to confirm what's form of documentation. Are we referring to the transfer pricing policy itself, or a documentation that actually shows that I have complied with the transfer price or transfer prices that I've actually adopted in my policy? I just need a confirmation and clarification on which documentation is actually required. Thank you.
The beauty of the transfer pricing regulation in Nigeria is the fact that from the very day one, you have provisions for advanced pricing agreements. Now, my question to Mr. Bamidele is this. Do we expect to see further guidelines or circular with respect to the step-by-step or the roadmap in respect of advanced pricing agreements? Because when you speak to clients, these are the things they want to know upfront. How will it look like? What are the things the steps I need to follow? Now, the second question is with regards to capitalization. I hear Mr. Bamidele mention that thin capitalization could also be considered while looking at clients' records with respect to transfer pricing. Now, the question is there any specific ratio that the FRS will advise, maybe later, for guidance purposes? Because countries with thin capitalization will provide specific ratio for taxpayers to abide by.
The first question is on carrying out the mode TP adjustment is going to take by FRS. Is it going to be part of routine tax audit exercise? Or we're going to have a separate TP assessment desk? If so, are they going to be made available at every LTO, MTO, or ITO? The second question is on whether FRS is going to issue further TP guidelines on transfer pricing to explain some gray areas of the regulation. This is very important, especially in the area of documentation, sourcing for comparability, and some other areas like that. And the third question is about safe harbor. You said even though the other regulatory authorities have accepted that price, they will still need to test if it's acceptable to FRS. So my question is, how practicable would that be? For instance, you've paid import duties to customs based on a particular valuation. Would FRS now say this is unacceptable to us?
We know that there are certain benchmarking providers, system providers, that will give benchmark as to specific industry. Is FRS going to mention or give list of benchmarking companies that are reliable, or is there any other source of benchmarking that we can use within Nigeria? And if we are not using Nigerian benchmark, which specific area are we going to focus on, Asia or Europe or US? Customs. Somebody has mentioned custom. Are we educating custom as we are educating ourselves? Because most of the TP issue we are going to be having has to do with the pricing at the price at which those imported raw materials are being brought into Nigeria. So is custom going to accept the fact that you will be reducing the cost of those imports? And if they are going to be reduced, are taxpayers going to get refund of, the custom duties already paid?
There were several contributions from the floor regarding other government agencies involved in the chain, especially the Customs Service and the National Office for Technology Acquisition and Promotion, NOTAP, vis-a-vis the transfer pricing rules and regulations.
Mr. Bamidele talked about supplementary and general provisions that exempt companies. A taxable person may be exempted from the requirements of Regulation 6 if the controlled transactions are priced in accordance with the requirements of Nigeria's statutory provisions and other Nigerian law and satisfactory to the service to be at arm's length. Now, if my interpretation to this is that if I have no TAP approval for my service fee, then that means it's going to be allowable or deductible. For instance, this was effective September, and obviously it's not a month or 2 months for consultants to do the review and have the transfer pricing policy. So for instance, I have a service fee in January and my transfer pricing comes later. So does that mean that the NOTAP approval, which is usually based on your profit before tax and some other benchmarks, does that mean that the NOTAP approval will suffice for allowing that expense, or the transfer pricing will still override it?
What will now be deductible for your income tax purpose? So take, for instance, NOTAP has approved a particular rate, which ordinarily would satisfy deduction for income tax purpose. Now, when I now conduct my transfer pricing study, I then come up with another rate, which may be different from what NOTAP has approved. So what do we now take as, what do we now deduct for income tax purpose?
Still on NOTAP, we do recall that Mr. Oyedele, in rounding up his paper presentation at the workshop, which we shared with you last episode, spoke on this matter of NOTAP.
Other issues are potential conflict between what the transfer pricing regulation says and what other regulators are saying. The one that worries me the most is NOTAP, because they think their issue too is transfer pricing, even though they were not set up to do transfer pricing. In the regulations where the regulator or any other government agency has set the price, the taxman can accept it. That's what they call safe harbor. So which means don't go and bother yourself. If you sell
petrol to your subsidiary at regulated price, what transfer pricing are you doing? Government set the price, and we are using it, okay? But not in all cases. So if NOTAP gives you an approval, don't go and relax and say that's done, because the taxman may not accept it.
During the interactive session, Mr. Idele maintained his stand.
About NOTAP approval and safe harbor. Say we have NOTAP, and then we are talking about transfer pricing. How do you reconcile the two? Truth be told, my view is that NOTAP was not established for transfer pricing. Their role is for technology transfer. Let me give you an example. Based on NOTAP's guidelines, if a foreign company has 75% or more in a company in Nigeria, that foreign company is not entitled to any royalty, because they say this is more like you 100%. Why are you paying yourself royalty? In terms of technology transfer, whatever you have, just bring it to Nigeria. You don't need to charge for it. That is fine from NOTAP's point of view. But from transfer pricing point of view, that is not fine. Because the country where that IP was developed, they're going to be saying the entity is Nigeria, it's a separate legal entity. If it's using our brand, it should pay for it. And the right thing is to pay for it. The more difficult thing to deal with is how much. And that's the question your TP analysis should help you to answer. There was something that happened in Kenya, which is useful in this case. There was a local company that was manufacturing cement. Suddenly that local company was acquired by a foreign company. And then they put their own logo, very small, in the package. They introduced their own logo and started charging for it. The taxman disallowed it. Said, before you came, these guys were selling. If anybody was buying the cement, they are not buying because of your tiny logo that you introduced. It was already popular. People will not buy because of that new name. They are buying it already. So that royalty deserves nothing. Whereas, if you open McDonald's today in Nigeria and start selling snacks under McDonald's, you sell, because many people will just go there because it's McDonald's without asking whether the snacks are okay. So that means McDonald's that developed the brand deserves something. The other one is about transfer mispricing. They said we should explain further. Any pricing you have in place that is not defensible and you are not even convinced yourself, it means that you have mispriced it and you should be prepared to pay the additional tax. Safe harbor and dealing with other regulators. How do you deal with customs says the value is 100 naira that you have lied by saying it's 20 naira. So they restated the value to 10 to 100 naira and charge you duty and VAT. The taxman says, since you declared 20, it's 20 you can deduct. The way to reconcile it is you cannot deduct 100 because you never paid 100. You paid 20. But the duties you paid was the duty on 100. So that duty of 100 is deductible. The VAT you pay is VAT on 100. That VAT, if it's an inventory that you sold to collect output VAT, it is also claimable. That is the way to reconcile it. Where you cannot reconcile it, you mean that whatever the FRS says takes precedence from a tax point of view, because the other regulators were not set up for tax purposes.
Coming from a neutral person, from a tax consultant, this is a view that we must all consider very well.
How long it will take for you to clear my container?
I dey do am, Oga. Then say we go bring our team.
Our team? Which team?
Custom don't change, Oga. And FRS say
and what you concern FRS with my business? I will talk to Gaba myself. You are fired.
Oga.
Oga Gaba, which one be this our team again?
The taxpayer identification number now the only way where you fit take do business with Nigerian Customs Service now. You fit process your own free tin, sharp for any FRIS office.
Soji,
you just sack me no.
Get our tin now.
This message now from Federal Inland Revenue Service and Nigeria Customs Service.
And to other matters arising.
There was an observant who said, how do we manage the transfer pricing assessment? Will you be raising assessments in that office? You're already thinking that's a tax office on its own. I don't have that picture at all. I don't see this unit raising assessment on its own. There is a place where assessment is done. Transfer pricing analysis will only assist those who are collecting. We need to get it right. If we want to set up another tax office solely for this purpose, no problem. Let it come in your recommendation as an option.
Talking about transfer of assets to Sons Company, are there TP issues? If we listen to Mr. Oyedele's presentation, it's not every related party transaction that will lead to transfer mispricing. No. But yet, it will still attract interest of the taxman to say, look, are there transfer mispricing issues? And if there are, they will be examined. If not, the person goes. It's not every audit that must produce an additional assessment.
The way to deal with that is, if the guys were not related, what would you have done? You have an asset, maybe it's your house, and you want to give it to a company. First, you must ensure that the asset is properly valued and that that transfer is consummated based on fair value, or what you call arm's length. If there are CGTs to be paid by the individual transferring it to an individual or a company, you pay the CGT. The person receiving it will have to record it at the fair value they have paid, and then on that basis claim their capital allowances, unless you've approached the FRS to get some waivers based on the fact that you're doing internal reorganization.
I think there are three comments about safe harbor and no-tab approval. If we read the regulation on safe harbor, it makes it very clear that the FRS may exempt a taxpayer if the pricing is based on government regulation. And Mr. Oyedele captured this very simply in his presentation. If you are selling petrol, for instance, petrol PMS is 97 naira per liter as of today. Everybody knows. So whether I'm buying from my grandfather or for my grandchildren, if it is at 97, I don't think there's any issue there with the taxman, because it's a regulated price and everybody can go home and sleep. But can we compare that with bread? If you buy Agege bread, different price. If you buy UTC bread, different price. If those of us who come from Abuja buy Grand Square bread, different price. So again, you begin to ask yourself, what are the specific issues? So I think we can put issue of safe harbor within this context, not within the context of I have a no-tab approval. No. No-tab approval is a starting point. But the issue is that, is the taxman happy with the no-tab approval based on the arm's length principle? I think that is the question that the taxman will want to ask himself and will want to seek the assistance of the taxpayer to answer. And once this question is answered one way or the other, then it determines for the taxman whether to accept the no-tab approval or to decountenance it. I think that is very clear. Pedabo asking whether TP examination will be routine or special. In every jurisdiction in the world, and you can please quote me, TP examination is always special. When the normal routine tax audit goes on and they begin to see issues of transfer pricing, they hands off and pass it on to the TP experts. Go to any jurisdiction, that is what happens. So it's not just one of those things. No. And we should also take it away from here that the fact that you have filed a TP return does not mean automatically you are going to be audited, because we are going to do what is called risk profiling. If all the transfer pricing transaction you have valued only 5 million naira, do you think I'm going to send my expert to come and sit down with you for 1 week? At what cost? I most likely will not do that. But if your transaction is worth about 5 billion, you can be sure that I can close down the old division and say, go and meet him and sit down with him. So, therefore, there are a lot of things that will come. Transfer pricing is based on risk profiling.
And these final words from Mr. Ajayi Bamidele, the point man of the FRS on transfer pricing.
Now, arm's length is not a new thing we are introducing into the Nigerian tax law. Arm's length has always been in our tax laws. All the tax laws you can think of. Is it petroleum profit tax, company income tax, personal income tax? They are there. Therefore, if the laws of this country, tax laws, are enforceable in the court of law, then the arm's length principle is enforceable in court of law.
There you are. transfer pricing is here to stay. Live it, breathe it, eat it, especially if you want to keep within the bounds of the tax laws in Nigeria. The only regret that we have is that time will not permit us to bring you that studio interview that we promised you. Don't worry, some other time. In the meantime, we want you to pay your taxes as and when due. Obey the laws. It pays to pay your taxes. Let's see you around next week.